So we can't afford to get all philosophical and tribal about where to put our money into this technology and then botch it. It is our responsibility to make the most of this chance. How do you strike a balance when taking risks? Max 10 risks since many people go. Absolute not. You don't have to go all out. If the price is 250 billion or 100 trillion, simply take the majority. Then after that, perform some sellout tailing. The exponential age concept is this week's topic of discussion for Raoul Powell. To find out why liquidity will make a comeback in 2024, Raoul delves further. Issues such as financial repression, the fourth turning point, and the demise of diversification are influencing market trends. As of current now, Solana is practically getting 90% of my liquid net worth. I relocated some funds from Ethereum. Currently, my Bitcoin holdings are quite low. That doesn't imply Bitcoin isn't cool with me. In my opinion, it will just rise. No brainer at all. I believe I have another thesis regarding a collection of high-end NFTs that I own. Beyond that, I engage in some theorizing and other activities, but all for the sake of enjoyment. I can see, though, that the time horizon issue worries everyone. Taking a step back, I've only just begun to understand what's really happening on crypto Twitter, why the banana zone is so popular, and why there's such a backlash. This is everyone's hopes and desires. It belongs to everyone, you and I both. I see. What a paradox. They want it done well so badly but are terrified it will go wrong. Everyone is going through this same problem. As in the previous cycle, some people have post-traumatic stress disorder PTSD as a result of the most recent one. I see. There was a blow-off top and subsequent collapse in the preceding cycle. In this case, it was the stunted peak followed by the fall. The cycle is now a source of concern for the general public. As far as I can recall, Jeff Bezos was unconcerned with the business cycle. He merely held his shares. Why the heck are you trading block space, premium block space, if there is demand for it and the market is in a secular bull market? Invest in all the clearance items. Hell sure, if it drops by 85%, you're on board. Because I, too, was a macro-type cyclical man, it took me a while to figure it out. Yes, I believe we should start at the top and sell it from there. So I'm 30 years old and I can probably guess the tops from the code cycle and all that other things, but is it really important? Yeah, I understand. A home could be in your future. And now we have lifestyle chips, I understand. Very well. You won't put the sale amount back in at the low down 85% if you've earned a ton of money and take it off at the high end. Nail it. The day will come when crypto investors are thrown into the gulags and everyone is claiming that you are a criminal. I'm not going to do it, you say. Not to mention that you're going to utterly ruin everything. Another one I brought up in my conversation with Chris Spanisky is how people often wonder, where does the top come from? Could it be that early? Is this the usual? December has always been the month in question. However, for some reason, everyone is terrified that this time will be different. Very well. And I have no idea about that. We have no idea. We don't have a clue. A bubble top is what it will be. The point is moot. Since we do not have 22, the most terrifying thing to me is the possibility of a correction in 2026. Massive inflation in the pandemic stuff. Have it be. Just picture a 40% drop in Bitcoin and a 20% drop in NASDAQ. This probability is one of my favorites, of course. Many alts will experience a precipitous decline of 99%. Bitcoin is all I'm referring to. While everyone waits for the down 70, the deal will go unrealized. The experts at 10x Research have predicted a possible lower objective for the price of Bitcoin and the current downward trend is borne out by that prediction. They'd sound the alarm that Bitcoin's precipitous fall might be the start of a far steeper downturn, with the cryptocurrency perhaps falling to $50,000. The market sentiment has changed dramatically as buy flows have dried up and sell flows have accelerated, according to 10x Research, which has occurred after breaking the psychological level at $60,000 towards $50,000. According to 10x Research analyst Marcus Thielen, our data from early June already hinted at an overbought market ripe for correction. This implies that the downward spiral was bound to happen. Bitcoin is expected to break out of its consolidation zone and decrease towards $50,000, according to the following graphic supplied by Thielen on June 24th, in reference to the possibility of a double top pattern materializing. When price action hits two parallel peaks with a small retracement in the middle and stays above a shared line called the neckline, a double top pattern is formed. When the price falls below the neckline, sometimes by a quantity equal to the distance between the peaks and the neckline, this pattern usually ends. From what we've seen over the last 3 months, range trading is a tricky phase with many of false breakouts. In addition, Thielen said that numerous altcoins have seen substantial decreases because to topping formations, which has left the average retail investor susceptible. While Thielen has a lower downside goal for Bitcoin, and Capital founder Michael Van de Poppy has a little greater one. Bitcoin, according to Van de Poppy's prediction, will fall to $52,809 after breaking below the May 1st low of $56,000 and collecting the demand-side liquidity that lies beneath it. A typical bear flag pattern has developed in the Bitcoin price action, which is a bearish continuation setup that occurs when the price consolidates inside an upsloping range after a strong price decrease. Usually, a bear flag will disappear whenever the price falls to a level equal to the height of the prior downturn and breaks below the lower trend line. The last low for Bitcoin price was $49,200 on February 12th, therefore this is the new lower objective. Also at 29, the daily relative strength indicator for Bitcoin is oversold. The severity of the current sell-off can be explained by this, which increases the likelihood that Bitcoin will hit its bear flag target in a secular bull market. There are two assets, technology and crypto, and maybe crypto technology as well, but that's about it. Numbers increase the most. 8. The most rapidly evolving technological epoch in recorded human history has passed. Just now, the world has access to the power of unlimited human intelligence. To what extent are we unaware of it? The product of 10 and 100. Robots have just supplanted humans. Our fleet includes self-driving vehicles. We can change a person's DNA. All we have here is La Land, the science fiction book. Moreover, these are businesses. Regarding products, we have moved on from discussing them. These are occurring in fact, and people still want to put their money into vintage items. Because, well, look at how affordable it is these days. What on earth are you not getting out of this? Is your gold mine really going to make a difference to anybody? Seriously, when you know what's happening, but that doesn't guarantee stock prices will keep rising indefinitely. That doesn't rule out the possibility of bubble cycles, though. That is not it. However, in a world where assets are highly connected, it's like picking the highest performing asset if you don't possess technology. Even if you don't trade Bitcoin, you're still hurting yourself. Well, he's just a bubble. I can hear people saying now, it's only a pretense. You must have actual revenue streams and actual this. Oh, and consider the fates of Amazon, Google, and Facebook. Well, it's all about the mid-curve. That is not meant to be offensive in any way. I think we can all relate. Just when you think you have everything figured out, those pesky monkey voices start talking again. Remove all the irrelevant tweets. Will tomorrow be even more reliant on technology than today? Definitely not. Then go ahead. It is as easy as that. So tomorrow, everything will be more computerized. That is all. In that case, what are your options in the event of a bubble cycle followed by a crash? Invest in additional technological tools. Why? Because the future will be more digital than the present. Ugh, it's so tough. The most absurdly basic thesis question definitely needs an answer from me. Plus, it's humiliating. People are saying, these guys are complete dimwits, which is embarrassing. It's been 35 years of hard effort, but I finally finished it. Perhaps I'm correct. Well, we'll have to wait and see.